It's a story of a management team doing what they told shareholders they were going to do.
A little over a year ago now, we announced a decision to proceed with the mine here.
And not only are we starting with, I think, the 15th highest grade gold mine in the world, which is a phenomenal place to start in terms of stability.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, my next interview is with soon-to-be Canada's newest gold producer, Pure Gold Mining. And I'm joined by the founder and chairman of Oxygen Capital, Mark O'Day, along with the CEO and president of Pure Gold Mining, Darin Labrenz. Enjoy. Okay, so I'll just jump in, guys. Look, it's awesome having you back on the show, and we've had you on twice in the last 6 months. I'm a shareholder and have been for a couple of years, so it's been nice to keep our viewers appraised of what you've been up to. And as a result, most people are pretty familiar with the story. But just in case anyone's just tuning in right now to the Pure Gold story, and they pull up the chart and they see a company that was pretty tightly held for the last several years, and then suddenly in the spring, a surge of activity. Darin, could you bring anybody in who's maybe just tuning in right now and isn't familiar? Give them the quick elevator pitch.
Yeah, absolutely. So I'm actually speaking to you from site, and I can say it's quite the beehive of activity here. As our VP Operations Ken Donner likes to say, it's like somebody kicked an anthill out there. It's pretty exciting times. As you know, we've had an extremely busy year. About a year ago, a little over a year ago now, we announced a decision to proceed with the mine here at the Pure Gold Mine, and over the past 9 months, it's incredible the amount of work that's been conducted here at site. You start with the underground works. We started underground with test mining 2 years ago. We continued development activities here, opening up the mine, opening up the initial mining areas that will form the first feed to go into the mill, and that work is progressing extremely well. In fact, we're a little bit ahead of plan with respect to that works. Outside my window to the right, we can look at some of the surface infrastructure that's come into the foreground now, if you will. As you know, as a brownfield site, this place historically produced 2.5 million ounces at about 10 grams per ton, and came with certain infrastructure that allowed us to move very quickly into production. But we're making significant improvements such that at the end of the day, when you look at our milling facility, it's a brand new mill. We've got a new SAG mill in there, a new ball mill, we've got a new gravity circuit, and we've added, improved upon the circuit to provide a more efficient and more environmentally friendly circuit. So that's progressing extremely well. We've got a brand new water treatment plant, and importantly, the team has grown from what several years ago was quite a small team to about 200 individuals now. And again, I'm really happy about the way it's come together. So I kind of give you a sense of what's happening on the site, but in terms of the quick elevator pitch, Pure Gold's taken very much a phased approach to building our mine here in Red Lake. We've established a 2.1 million ounce indicated resource at 9 grams per ton. We've got a further 500,000 ounces of inferred at 8 grams per ton. From that, we carved out a 1 million ounce reserve that sits at 9 grams per ton, and that's our phase 1 mine, if you will. That's what we're building today. But we're already thinking about phase 2 and how we implement and bring in some of those additional resources into the fold through a future expansion. And so that's kind of painting the picture of where we're going. And more broadly speaking, we really feel that we've just scratched the surface here with respect to establishing the total resource endowment of this project. So it's a really exciting time in the evolution of Pure Gold.
Okay, and I want to jump into a lot of that. So, if you look back at the last 6 years, you guys have been busy, right? You've been drilling, expanding the resource, and in 6 years, really got this thing to production. That's the story. It's like Pure Gold's kind of a two-part story. It's the story of patient shareholders being handsomely rewarded. I say patient, even though you guys actually moved very fast. And secondly, it's a story of a management team doing what they told shareholders they were going to do, right? And attracting some of the smartest capital along the way. And you continue to do so. And we're going to get into that too. But, you've got a hard job right now, right? Because you've seen this grand appreciation in your share price. And the difference between you and I is that I build a private company, right? I'm a private entrepreneur. I've got to manage my team, build great products, ideally over-deliver on anything I promise. You have to do that and keep shareholders appeased, right? And so after a fantastic share appreciation like we've seen, how are you gonna maintain that level of satisfaction with your shareholder base in the near term here?
We've really been counter-cyclical from day one. When you look back, we acquired this asset in 2014 for about $10 million in cash and stock, and nobody was really paying attention at the time. And we put together a top-tier board and management team with over 135 years of collective experience in the Red Lake camp. We grew the resource to where it stands today. We've established first probable reserves on the site. And I think we're benefiting from that now as we transition into production, and we're starting to see, that classic Lassonde curve, where as you move towards production, you start to see your share price appreciate. Mark and I would agree that we know very well that as soon as we pour that first gold in just weeks away now, investors are going to ask what's next. And that's certainly something that we've been asking ourselves for years now. If you step back even to when we were conducting the feasibility study, we were already thinking about this phased approach and how we'd build a mine out sequentially. And so we've got established resources. We made 3 discoveries outside of the mine that sit there today. We've got early stage engineering work that we've established on those discoveries. We continue to drill aggressively, looking to grow them. And our view is that we have a real opportunity here to tack those on through an expansion of the plant, improve the production profile, improve the scale of the project. And that's going to continue to drive value for our shareholders.
Mm.
Yeah, if I could just jump in there and add to that theme, Darin. Good to see you again, Jay. This is primarily a growth story. So we're a near-term cash flowing entity that's coming through, a very challenging 5-year period in the market. Our timing's been impeccable in terms of being able to deliver up this ultra high grade deposit, this mine. I think it's ranked 15th in the world in terms of grade. So it's way up there. So we occupy a pretty rare, unique niche in the gold mining space. And so to answer your question, keeping shareholders interested, it all comes down to growth. We really fundamentally believe that we're just at the beginning of our story here. When you look at the longevity of producing assets in the Red Lake camp itself, it's been producing nonstop for almost a century. So some of these mines have just kept delivering and reinventing themselves. And we feel very much like the resources and the reserves that we've outlined today for phase 1 is really barely scratching the surface of what ultimately will get discovered and become the platform for our growth over the decades to come. And we really do believe that this has the potential to be a multi-generational asset, just like the famous Campbell Red Lake mines up the road. They share the same geology, they share the same sort of structural history and gold history, and I believe the same potential for the same endowment over time. And it's up to us and Darin and the team to demonstrate that to shareholders, but that is fundamentally our thesis.
Yeah, and some of the expertise too. Darin, you were the head geo, right, at New Placer's Campbell mine in the mid-90s, is that right? It's your neck of the woods.
Yeah, and in fact, you step back to that time period and you look at that deposit, and it didn't look that dissimilar to what we've established today. And so that really speaks to the runway that we see in front of us right now.
Now, drawing those parallels, I hear you guys compared to 2 other mines. And the first is Kirkland Lake, right? Eric Sprott has compared you guys to potentially like Kirkland Lake, right? So can you tell me a little bit, why do you think Eric makes that comparison?
Yeah, it's an interesting analogy. When you look at Kirkland Lake, it shares a similar story to the early days of Goldcorp in the Red Lake mine just up the road from us here. These are all mines that were, steady producing mines. They generate ounces, generate cash flow, but they're, really on the kind of the edge of becoming world-class assets. And in each case, they made a disruptive, transformative discovery. Speaking of the Red Lake mine, that was the high-grade zone. So the high-grade zone was discovered at a depth of about 1.5 kilometers below surface. It was a mine that had been producing for 50 years at the time. And it took the Rob McEwen's Red Lake mine from a 50,000 ounce producer to a 550,000 ounce producer virtually overnight. And the same can be said with Kirkland Lake. You look at the Macassa mine and the SMC discovery, or the Fosterville mine and the Swan Zone. In each of those cases, it shares a path with the Red Lake mine. Went from stable production to an outperformer, a world-class top-tier asset, and turned both those companies. Goldcorp, as discussed, was a multi-billion-dollar company. In fact, the largest by market cap in the world. And Kirkland Lake today is just shy of a $20 billion market cap. So you step across to our own asset. Of course, we share the exact same geology, the same geological environment as the Red Lake mine. And in fact, when you look at about 800 meters below surface, we have a zone that we call the 8 zone. And it's our high-grade zone. It shares a similar geological environment to the Red Lake high-grade zone. It has a grade that exceeds our overall reserve grade by 2 to 3 times, and it's completely open for expansion. So that opportunity for that real disruptive discovery is something that we recognize and are really excited about. Eric Sprott recognizes that, and I think that's where that analogy stems from, is that opportunity for discovery.
Yeah, and worth noting, he's a shareholder, and if you try to follow Eric into every deal, you'll go broke, because he makes $100, $2 million bets, but his investment in Pure Gold is not another $2 million bet. I think he's in for, is it $15 or $30 million?
Yeah, that's correct. He's in for $30 million. He first invested in July of last year as part of the package that was raised to construct our phase 1 mine. And he approached us earlier this year and said, again, I'm really excited about the 8 zone. I'm excited about the high grade potential of the Pure Gold mine, and I'd like to invest in exploration, allow us to continue that aggressive exploration through the construction phase of our project. And really, that makes us quite unique. It's not often that you're building a mine with a capital intensive period of the evolution of the company that you can continue to explore and look for growth. And the investment by Eric certainly allows us that opportunity.
Yeah. And grade, I think it's worthwhile stressing grade a little bit here, Darin. And one of the appeals to Eric of his investment in Pure Gold was the grade. And not only are we starting with, I think, the 15th highest grade gold mine in the world, which is a phenomenal place to start in terms of stability, but when you look at the 8 zone and the types of grades that exist from drill intercepts into the 8 zone, they're mind-blowing, right? They're multiples higher grade than our average grade in our feasibility study. And it's those types of zones, and these 8 zone type areas in deposits like ours don't occur in isolation. There's going to be, we hope there will be other 8 zones discovered over time. And the 8 zone has all kinds of areas to expand up and down plunge. So the grade coupled with the growth of that high grade zone holds a lot of appeal for this transformative growth potential that Eric really likes.
Mm-hmm. Okay, another notable shareholder is Rob McEwen. Now, what attracted Rob to the story?
Yeah, I think that's it's a fairly easy one to answer when you look at Rob McEwen's history, and in particular his history in Red Lake. Obviously Rob was founder of Goldcorp and was at the helm when the high grade zone was discovered, and certainly recognizes the value of that, the type of real high grade disruptive discovery. And so he was actually the lead investor when we acquired this asset, and we sat down and we shared our experiences in the Red Lake area, which Rob, Mark, and I and several other team members have deep experience in the camp, and it was pretty clear that he had a good understanding of the Pure Gold site and the opportunity that was there, and in fact the similarities between the 2 assets, and so became a lead investor at that time.
Okay.
Yeah. In fact, when you can superimpose, we sat down with Rob a few months ago to give him an update, and when you look at the mine trend that hosted the Campbell Red Lake mine, part of that belonged to Goldcorp at the time when Rob ran it. When you look at that trend that hosts 28 million ounces or 25 million ounces of past production, and you sort of rotate it and superimpose it on the Pure Gold mine trend just to the south, they're the same scale, same geology, and it's a pretty compelling case to say, well, look, if there's this much gold that's been produced over the last century up in this trend, and this lower trend has been largely ignored, but it has all the same attributes, and look, they're onto something pretty meaningful already with a multi-million ounce high-grade discovery. It's got a lot of potential to grow. So it's an easy analog to make, and somebody like Rob, who spent huge part of his career in the Red Lake camp, he gets it.
Okay. No, I'm almost done drawing parallels, I promise, but only because I'm also speaking to John McConnell today. And I do hear investors compare you guys to the Eagle Mine, Canada's newest producing gold mine up in the Yukon. Do you get that from your shareholder base? Do people draw that parallel?
Yeah, that's interesting, and I really haven't heard that comparison so much. But it's not a complete surprise when you think about it. Companies share similar characteristics. We both have projects located in Canada, so I think we both benefit from jurisdiction. Costs are in Canadian dollars. Obviously, revenue is in U.S. dollars, and so we both benefit from a period of incredible margin expansion over the last year. And Victoria Gold and Pure Gold, we're two of the newest mines. They've just reached commercial production. We're just about to start production, and so I think we've both seen ourselves rise through. Again, see the benefit of that onset of production and a rise in share price to recognize the value of the cash flow that's about to come in our case. So I think they're similar from that perspective, and the comparison really doesn't surprise me. At the end of the day, too, you look at it, and both are run by top-notch management teams, and I think that's really critical to have a combination of a great asset and a great team behind it.
Mm. And so we're 6 weeks out, right, from phase one production. We're forecasting 2.3 billion in revenue. Correct, year one. You want to run through the costs for our viewers here? Run through the numbers for our viewers here.
It's pretty phenomenal. And you think about a feasibility study, and unfortunately it's the yardstick you get measured against, but no project is static, and certainly ours is the exact opposite of static. But when you look at the phase one mine, if you will, what we've constructed to date, we're looking at at $1,800 per ounce. You're looking at about $2.3 billion in revenue, $1.2 billion in pre-tax cash flow. All-in sustaining costs are projected to be $787 an ounce, and really it's grade that's driving that. Again, as Mark said, at 9 grams per ton, we are a high-grade mine, and a lot of people use that word high grade. And what does it really mean? Well, in our case, we're the 4th highest grade mine in Canada. We're projected to be 95th percentile worldwide, so right at the top of the curve. And so that drives incredible margins. On a US dollar basis, we're over 100% margin at $1,013 an ounce at $1,800 an ounce, and about 1,400 Canadian. And so it's absolutely phenomenal, and we're set to generate real strong cash flow out of the gate, and that lends itself to growth. It lends itself to rapid payback of the capital that goes in, and it's an incredible position to be in to have timed the market as we have. Yeah,
I mean that's really a key bullet point, is your timing is very, very exciting. Okay, and I guess that's what we're looking forward to, right? And touch on phase two a little bit when it comes to timing, Darin. What can shareholders look forward to?
Yeah, so we've, obviously, as I said, we've been thinking about phase two for some time, and to that end, we've got established resources in 3 discoveries. We call it Fork Zone, Wedge Zone, Restless South Zone. We've done early stage engineering work to understand, how they might be mined, what kind of productivity we could get out of those zones, and internally we're modeling an expansion. And so a lot of the work that we're doing right now is really driving towards that future expansion, and that's across the entire mineral resource. We're looking at changes within the feasibility study, include larger ramp openings, addition of a second ramp, opportunities to move to larger trucks. When you think about metal price, we can think about cutoff grades, both in a resource perspective. Clearly, if we're economic at $1,000 an ounce, we're really economic today. And so we're not going to look at supplanting material out of the existing plant with lower grade material, but we can stockpile some material, and then we can think about expansion and what the right cutoff is. And it gets really exciting when you start thinking about the mineral reserves. As you start to shift down that grade profile, what you see are larger mineable shapes, better continuity, and that translates into a lower mining cost. So all these things we're putting together, new resources, new discoveries, mine optimizations, if you will, to enhance the productivity from the phase one mine, and looking towards expansion. So what can investors expect? Well, I would look for an updated mineral resource towards the tail end of Q1 next year. We've drilled over 400 holes since the last resource update. And so that'll be a material kind of point in next year's disclosure. And I would look for us to continue to drive towards that expansion to crystallize that through an economic study so that we can actually start talking to the market about what an expansion looks like and what phase two actually looks like.
Okay. Yeah, and that's the Pure Gold story, right? It's like we can as a shareholder, we can kind of breathe a little bit. You know, we're 6 weeks out from production. I feel like it's a safe place for capital, but there's still significant upside. You guys are a high grade, soon to be Canada's newest high grade producer, 4th highest grade in Canada, 15th in the world, and lots of room to grow and expand that resource. Now, you know, I was going to ask, because both of you started your careers as geologists before becoming executives. I was going to say, do you still get your boots dirty? But Darin, I can see you're in the field as we speak, so I got my answer.
Yeah, I will say that I don't get my boots dirty as much as I'd like to, or as much as I used to, but I would say that Darin and I both are incredibly fortunate to be surrounded by so many talented geologists who we get to work with every day, even though I'm not out in the field interacting with them on a daily basis. I mean, they are the ones driving the value creation on the ground. People like Phil Smerchansky and Chris Lee at Pure Gold. I don't know if Phil is there in the room with you, Darin, or not.
I was hoping to drag him in, but he's I think
okay.
he's with some drill core right now, so he's not.
He could have had a little cameo appearance. That would have been nice. You've got, you know, people like Moira Smith and Pete Shabasteri at Liberty Gold. You know, they're driving the bus there. You got Gerda Wober at Discovery Metals, Ian Neal, Tyler Caswell at Sun Metals. I mean, these are a collection of top-notch geologists in the overall Oxygen group who are responsible for all the value creation. So, and the same goes for Pure Gold. So we're very, very fortunate.
Yeah, I'm really glad you touched on that, Mark, because it is worth discussing. You know, Pure Gold doesn't operate in a vacuum, right? The Oxygen Capital Group, you've got a lot of resources you can borrow and lend back and forth, and some amazing companies, right? Everybody who's watching this is familiar with Liberty Gold, Discovery Metals, Sun Metals. Do you want to expand on that a little bit? What's the advantage of having that whole ecosystem at your disposal, either as the CEO of Pure Gold or as leading Oxygen Capital, Mark?
Yeah, I mean, there's a ton of tangible and intangible benefits. I mean, there's the nuts and bolts tangible benefit of cost savings, of sharing resources, but beyond that, way beyond that, the benefits of an expanded gene pool and this ecosystem that we've created allows ideas to get bounced around, talent to get, you know, weigh in on certain issues, you know, opine on geological merits of new opportunities that we're looking at. And the list goes on and on. So I think it really is a powerful platform for not only deal flow, but also deal execution and ultimately project executions, because we can draw on a big pool of talent.
Okay, look, I'm really glad that we had you guys back on for an update. I think timing's awesome to have you back on and update all of our viewers on what's really going to happen soon here in the near term. Like we said, we're 6 weeks out from production, so congratulations. And I look forward to catching up again soon.